Oh, no. There we go. That works. Alrighty, let's get this ball rolling. Hey, Ann's here. What are we doing here? Wow. Ann's here. Ann's here. And Richard's here. How can you both be here at the same time? Really? Who do we got? Jen? CPRI. Is that really what he wants to take a look at? What the heck is Jen Snow? You want CPR? What the heck is CPRI? CPRI. Now, Jen, if I have to ask what the heck company is this, that's not a good sign. Right from the start, the very start, not a hi, hello, how are you, but nope, CPRI stock, question mark. All right, Jen, let's take a look at it. CPRI, who the heck are they? What the heck do they do? Well, let's take a look. Before I do that, introductions are in store, I assume. Good evening, everyone. My name is James. Dividend Stock Talk is my game. Oh, look at that. That's almost funny. Anyway, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a safe, predictable, and consistent 1% per week. Look at the camera was crooked. All right. Safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks, and those are companies that have consistently increased their dividends for more than 20 consecutive years. So, Miss Jen, are you ready for me to take a look at this? Because I've never heard of it. If I've never heard of it, there's a good possibility it's going to be a no. And not just because, well, let's see how many times they've increased their dividends and how consistently they profit. Okay. CPRI. Pirate Boy, how are you today? CPRI. Okay, CPRI, Capri Holdings Limited. Jen, there are no dividends at this time period. So why would you ask me to take a look at a dividend stock that's not a dividend stock? Because that's what we do here. We invest in dividend stocks. Weekly, not monthly, you got it. So I invest in dividend stocks for weekly cash flow. Okay, so Capri, KPRI, CPRI, has no dividends. So why are we looking at it? All right, that's going to be a no. CPRI, that's a no. Anis Chica, ¿qué pasa, amigo? ¿Qué pasa? ¿Cómo está, señorita? I have no idea. Jill, just joined. What is this stream about? Dividend investing for weekly cash flow using safe, predictable, consistent companies that have increased their dividends for more than 20 consecutive years. And then we do a covered call against them using stock options so we can attain a 1% per week, simply, safely, predictably, consistently, and with no way to lose. That's my dream job. Well, dude, come on down. Johnny, tell him what he's won. Woohoo! Anyway, no, seriously, we're just getting started, so let's keep going. Sorry, Jen, CPRI is going to be a no. Let's keep on moving along. Keep on keeping on. Jen Bruner, shared live. Thank you there, Miss Jen. How's the old boy doing this? Oh, there he is right there. That's funny. Do one of you guys have a TV in one room and one of you guys in the other room? Is that the way you two do it? For those of you who don't know, husband and wife are here. Both sign in two different accounts. They're not sharing the big screen TV. Oh, wait a second. Maybe they're sitting on the couch. A bowl of popcorn, big screen TV. Someone has a laptop or a phone in handy. Way to go. KB, how are you doing today? Let's keep on going through these greetings. How many people jumping on in? Jen Snow, Jimmy Choo, Versace, Michael Kors. Oh, that's the company you want me to take a look at? That's what that is? CPRI? Well, if they have no dividends, if they don't share their profits, why would I be looking at them? Do you make money investing? Yes, I do. I make 1% every single week. Well, actually, a little bit more than 1%. Hold that thought. Let's go over to here. Take a look at my actual trades. See? Take a look at this. Week 33, 2.8. Ooh, that's terrible. Look at that. 2.8, 0.07. Ooh, I missed it on that one. That one I can't read that one. Let's go down a little bit. Week number 32, 3.15, 1.72. I can't read that one. What did we have? Walgreens, Marathon, Kohl's, CVS, MPW, Ford. More MPW, more CVS, more Kohl's, and more Marathon. Okay, well, what did we make that week? 3.15. Oh, look at this one. 4.05, 0.72. I didn't make 1% in this account this week. 2.85. Well, what did we have for week number 1, 5th week, 3rd quarter, in case you guys didn't know. So, 2.85, we had Ford, Kohl's, Marathon, Walgreens. 4 stocks, 0.72, not quite 1%. We had Wynn, Kohl's, Walgreens, MPW, Wynn, Bitto, Kohl's. Okay. And way over here, coming up at 4.05% for week number 31, we had WBA, Walgreens, Kohl's, Marathon, and Ford. So all my trades are listed from the beginning of the year to the present moment. Now, like I say, I average 1% every single week. Account number 1, I'm up over 60%. Account number 2, up over 70%. So far this year, 1% a week. Sometimes I make 1%, sometimes I don't. But on average, look, here's another one, right? 0.6, didn't make 1% there. But look at this one, 8.57. Now, I do basically the exact same trades in all of my accounts. Basically, I get 6 different accounts. I share 3 of them with you, okay? Sometimes I make over 1%, sometimes I don't. Very impressive. Do you like that, DMZ? All right, so let's get out of that. Let's get back to some stocks. I haven't coughed in days. Ginger, honey, and tea. Ginger tea and honey. Good for the throat. Keeps me from coughing. Yeah, judge just blocked merger. Oh, imagine that. Okay, Rich. She's sitting in her chair and I'm in mine. Oh, so you guys got 2 chairs, big screen TV. Do you got the popcorn? Do you guys drinking wine, beer, soda, coffee, cocoa? I don't know. Will you be streaming tomorrow? I stream every single night, 9 p.m. until 11:30 p.m. And it is recorded in case you miss one, or if you want to go all the way back to January, because I plan on going the whole year. I haven't quite decided if I'm going to do next year also. DMZ, maybe we'll see you tomorrow. Cool beans. All right, so I'm kind of curious, you guys. Okay, Rich and, Jill. Rich and Jill. You guys get your individual chairs. Okay, I'm trying to picture the setup at the house. Good evening, Darbin Lee. Back again, cool beans. So I'm kind of picturing the scene. You get the big screen TV. You each get your individual chairs. Are you eating popcorn, soda, milkshake, hot cocoa, hot milk? Rich needs to rest at night, so he needs that warm milk to put him to sleep. Anyway, I'm just kidding. All right, so Jen, terribly sorry. I did not know who that company was. If they don't have dividends, it's going to be an automatic no. The reason why I like dividend stocks, a couple of reasons. One, it allows a lot of confusion and frustration. Why? What do I mean by that? Because a dividend is nothing more than a profit the company gives to the investors. So we looked last night, 9,754 companies available any single day you can invest in. Okay, we actually checked last night. Half of those will take all their profits and put it back into the company. Well, that's for price escalation, for accumulation, stock accumulation. You know, so the stock price goes higher. Or the other half of the stock market, well, they take their profits and they share it with the investors, and that's you and me. That's the company I want. I'm 60 years old. I'm retired. I don't want to have to go to work. My life is pretty freaking fantastic. I get up when I want. I do a morning trading group with a select group of people that join my trading group. And then I just do whatever I want all day long. Then at night I come back here and help you guys out. Now, I have enough, okay, invested, and I get 1% per week. Now, if it wasn't for that 1% per week, I'd have to go back to work. Because the way the establishment has it, they want us to go to school 12, 14, 16 years, whatever. After school, they want us to go to college, and then they want us to get a job in the workforce, work 30, 40 years of our lives. Hey, Silver Wolf, how you doing? Back again? Cool beans. Then take our money and give it to someone on Wall Street to invest for us. And what do? They give us a 4% draw. A 4% draw on the money that I have right at this moment in time. Hell no, I wouldn't be retired. I'd still be working. And I kid you not. If I didn't have this strategy that allows me to get 50% per year, I'd still be working. Yeah, no thank you. So anyway, I felt may want to skip. Okay. I get distracted easily. I do say that. I do tell people that. So as I was saying, the money that I have, 1% a week allows me the lifestyle that I lead. It's nice, peaceful, quiet. I'm not saying any big numbers because that used to scare me away. I talk percentages because percentages are easy. Because whatever you have, if you can cut that in half at 50% rate of return, that's what it'd be. If you have 100 grand, 50% of that is 50,000. If you have 50,000, half of that is 25,000. I'm not going to sit here and tell you, oh, I made $20,000. Well, what the hell did I start out with? No, 1%. So whatever amount I have, whether I have 50,000, I make 1%, or whether I have 100,000, I make 1%, whatever that number is, it ends up at the end of the year of being roughly 50% or more. Well, at this present time, this year, I'm doing a hell of a lot better than 50%. Don't ask me why. It's just crazy out there. Anyway, that being said, let's just jump in, get started, and get moving, and let's take a look at some stuff. Okay. Emin. Hey, Emin, I haven't heard from you in a while. Is this the real James or the fake one? I don't know. Why don't you send me your number, and I'll give you a call. Funny thing is, I tell people every night, put your number in the DM, and I will call you. And it surprises the hell out of me when only one or maybe two phone calls. Because I get an average between 4 and 20,000 people come through every night. And I say the same thing every night. If you really want to talk to me, if you're really serious, put your phone number in the chat. I'll call you. I have no pressure salesman. You can talk to anybody who I ever called, asking if I ever give them a sales pitch. Nope, I don't. I don't sales pitch people. If you like what you see, if you like what you hear, and remember that this is an important one. If I'm sharing with you for free a trading strategy that is simple, safe, predictable, consistent, no way to lose, and can make up to 50% or more per year, oh, what the hell do you think I got up my sleeve? Because I got some trading strategies up my sleeve that I don't share here. But I do share it in the morning trading group because I get 6 accounts, I only share 3. And I don't share every one of them either. All right. Nice shirt, dude. You like that? Could be yours if the price is right. Okay. Okay, where was I? I missed some questions. I did it every time I hit the button wrong. I missed some questions. What did I miss? What did I miss? Casey Prowl, we already did that one. We already did that one. We already did that. We already did that. We already did that. She's sitting in her chair. Okay, back to where we are. Okay, here we go. This is not safe. Jen, I don't know what you mean by that. May want to skip. All right. Nice shirt, dude. Thank you. For the right price, you can have one too. All right. Being new, where would you recommend I start? Ooh, where do I recommend start? Mentality. That's the first place you got to start. Number one, you got to be fed up with what you got, what you're being offered. I was pissed off. What do you mean? I put $100,000 into Bank of America. $100 grand into Bank of America, and they still turn me down for a credit card. I said, fuck that, give me my money back. I'll go put it somewhere else. Someone appreciates me. That way being said, number one, you got to be fed up with what they are offering, what they are telling you. That's number one, okay? Can you do it? Because it's a total different language. It's a total different way of looking at things. Because most people invest with the envision of making annual percentage returns, annualized. Okay, that's a whole year. I don't know about you, but I only have two bills that come due at the end of the year: tax bill and then my insurance bill. That's it. Everything else is weekly or monthly. I want weekly cash flow. I grew up in the 60s, 70s, and 80s where we went to work 8 o'clock in the morning and we got out of work 4:30 at Friday afternoon. That's when I want my paycheck. Well, this is basically the same way. The stock market opens up at 9 a.m. or 9:30 a.m. Is it 9:30? Yeah, 9:30 to 4. 9:30 a.m. I jump online with my trading group at 9 a.m. so we can take a look at what's up for today. All right, and we stay on until you guys run out of questions. After that, well, I go about my day, and Friday afternoon, I want to get paid. Friday afternoon, we jump on at 2 o'clock. We take a look at all our positions, all the positions I bought throughout the week. I want to make sure that they are safe and what is the best choice for next week. All right, let me finish the question. Where do you start? Number one is your mentality. Can you do it? Does it make, important question, does it make sense? Okay, you're going to have family, friends, and relatives tell you you're crazy. Nobody gets 50% a year because nobody does. Usually, you look around and you see who makes 50% per year. Not many people. All right, let's keep on going. But that's where you start. Number one is mentality, thinking you can do it. And then the next step is seeing things differently, because that's basically what we're doing here. We're doing things differently. But the main takeaway, every day, I say this every day, it makes sense. Now remember, here's the 5 criteria. This came about when my 9-year-old daughter jumped up on my lap and took in '08 and said, "Daddy, teach me what you're doing." Okay, she was 9 years old. Now, she wasn't a Mensa student. I love her dearly. She's just a regular, every A, ordinary girl. Nothing special other than she's mine. But that being said, it had to be simple, safe, predictable, consistent, and no way to lose. That's the 5 criteria I had to come up with. So, rule number 1, never buy something you don't understand. There's 9,752 different companies you can invest in at any time. Why are you looking at stuff you don't understand or you don't know? If you know IBM, great. AT&T, Walmart, Walgreens, Home Depot, Lowe's, American Express, Disney, MasterCard. These companies are household name brands. You know who they are. A lot of them have been in business for over 50 years. Okay, Ford has been in business over 100 years. Harley Davidson, over 100 years. Whirlpool, I'm not quite sure when they came about. But anyway, a good quality company that you've heard of, that you know, that you understand. That's all I'm asking. Okay, and then we look at the simplicities of it. Let's find one that we actually know. AT&T. We all know who AT&T is. First thing, I always want to look at 5 things. High, where's the low? Where was it a year ago? Where is it now? And what's the direction? Look at it. Up, sideways, up, sideways. Okay, simple. Even a 3rd grader can figure it out. Okay, so the 5 rules. Rule number 1, never buy something you don't understand. You don't understand it, you don't want to hold on to it for the rest of your life, don't buy it. Rule number 2, never sell at a loss. It kind of defeats the purpose of the whole game. And if you don't think it's a game, well, think again, because it is. Rule number 3, make sure the company is consistently profitable. Now, this one really boggles my mind. Okay, people will ask me to take a look at stocks. I will take a look at the numbers, and I'm thinking to myself, let's say it all together, Brown. You ready? 1, 2, 3. What the hell are you thinking? This is your money. Why are you putting money into a piece of crap? Take a look at the numbers. Numbers don't lie. If the company is consistently profitable, great. They deserve your investment, not companies that are brand new. Let me back up for a second. It depends on where you're coming from. For me, I want safety, simplicity, consistency. I want to make sure that I'm getting a weekly paycheck every single week. So make sure the company's consistently profitable, and then sharing the profits through weekly options. That is number 4. Rule number 4, okay? Make sure it has weekly options. I want a weekly paycheck, okay? That's me. You don't like it? Alrighty. Rule number 5, make sure the numbers work. Now, I'm going to be going over that several times tonight. We're actually going to go through some examples. So when I say make sure the numbers work, first, I want to make sure it's a good company, okay? I want to say, what am I buying it for? Now, I sell covered calls. It's one of the safest trading strategies there is. So I buy a stock, I sell the rights for someone else to buy it from me. Okay, if you're not understanding what that means, basically, if you have a car or purse or a dress or whatever it is that you think has value to it, slap a for sale sign on it, somebody comes, takes a look, say, ooh, I like that. Let me give you this money, hold it to me until Friday. If I come back on Friday, I'll give you the money for it. If I don't come back on Friday, sell it to someone else next week. That's kind of what we're doing. But we're buying a stock, a company that we know and is profitable, and then we're selling the rights through a covered call. A covered call is a contract between you and whoever buys it, whoever enters that contract with you. Granted, you never know who that is. You don't, because you can't sell it to someone else. You have to sell it to the market maker. We'll get more on him in a little bit. But if I'm buying it at $22.20, well, here's the strike prices here. Now, what are the strike prices? That's what I can sell it for. I can buy it now and sell it now all at once, and my profit is already built in through what is called a covered call. Covered means it's a safe bet. You're covered. Okay? The call is giving someone the option, not the obligation. Okay? Option is I can do it if I want. I don't have to do it if I don't want. Okay? Gives them the right, but not the obligation. Okay? To buy at a certain price by a certain date. Now, when I say a certain date, the options that we're looking at, okay, are all weekly options. I don't do monthly options because the numbers just don't go in my favor. Okay, I will tell you, and I'll tell you flat out, I like to have the odds and probabilities in my favor. Okay, so 80% of all options expire worthless, so that means 20% do not. Wait a minute, 20% do expire. All right, 80% expire worthless. 20% actually make money. So, do I want to be a buyer and chance being on the 20% side? No, I want to be a seller and I want to be on the 80% side because I want the 80% chance of being right. Okay, that's that one. Okay, so if I'm buying a stock at the current price and I'm selling it just a little bit above or below the current price, now I'll show you how you get that price. I'm not going to hide anything. Okay, so at $22.20, you have either the 22 or the 22.50. You can take your choice from either one. Now, the 22 is a safer bet. The 22.50, not as safe, but it's a little bit more profitable. And just a little bit. Not huge, just a little bit. Now, next thing I like about the covered calls, it tells me what my profit is going to be before I even buy it. Most people will buy a stock and have no idea whatsoever where they're going to get out. So, what you going to sell it at? I don't know, when it goes up. When it goes up to what? I don't know, when it goes up. I don't know. That's the answer I get all the time. Well, if you buy it, don't you have an idea in mind what you're going to sell it for? Well, that's the beauty of the strategy. It's like I'm buying it at the current price. I'm selling it at the current price. What am I collecting? I'm collecting what is called the premium. I'm pointing at the wrong one because that one expires tomorrow and has no value to it. So I'm going to get to that in a minute. If I'm buying it here, I'm selling it here, I'm collecting this. This here is called a premium. Now, that's kind of like an insurance policy because that's what calls and puts. Stock options were originally intended to be insurance policies. So if you bought a bunch of stock and you didn't want to lose any money, well, you would buy one of these or you would sell one of these in order to protect your financial interest. Well, somebody came up with some really cool ideas of just trading the options and making cash flow from it. Oh, cool, I'm all for that. All right, so if I buy it at $22.20, sell the 22s, I collect 36 cents. Now, I'm losing 20 cents off the top, so that means I'm only bringing in 16 cents. I'm going to say hell no to that one. This one right here, 13 cents, not 1%. I'm going to say hell no to that also. Well, this is AT&T. the premiums really aren't always that great. But you know which one is? Intel, INTC. Now, I'm sure you've heard of Intel, INTC. Now, I'm not trying to sell you Intel. I'm just telling you that the premiums, look, the stock is currently at 22.24. The 22s are going for $1.33. That's over 5%. That's crazy. The 2250s, it's 108. That's right around a little over 4.5%. But the nice thing I like about Intel, look at the numbers. Okay, the further out you go, you're still getting over 1%. Okay, it's currently at 22.24. If I sell the 23s, well, I'm getting 84 cents per share, and that's that's a little less than 4%. Plus, I'm also getting the difference between the purchase price and the strike price. So it's a nice, safe trade. Well, do I like Intel? Well, of course I do. I grew up with Intel. Okay, I'm a child of the 60s, 70s, and 80s, and well, part of that, I was an adult in the 90s, you know, with family and whatnot. So life was different. Different when you're a child, then when you're an adolescent, then when you're a teenager, then when you're a young adult. Antonio! 80% expiring worthless doesn't matter. You're actually hoping your call does assign, but thanks for all you do. Antonio, thank you for that. Now, I'm going to add just a little bit to that, Antonio. I really, honestly, don't care whether or not it gets assigned away from me or not. My number one, so this is something you might want to write down and keep, hey, Kevlin, how you doing? You might want to write this down. Now I forget where I was going with that one. Oh, here we go. This is the most important thing I'm looking for. Consistency in profit making. That means if the company is consistently profitable, well, they're going to increase the amount of money they give to their investors through their dividends. So that means that dividends go higher and higher and higher. Well, there's a group of companies called the Dividend Kings. Well, the name alone should give you some kind of intrigue, thinking, whoa, they must be the top of the food chain. Well, they are. To be a Dividend King, you have to increase your dividend payment to your shareholders for a minimum, are you ready for this? 5 decades. That's 50 years of increased dividends. Year after year after year after year. Means consistently profitable, because you can't increase your dividends, which is a share of the profits, if you're not consistently profitable. So a Dividend King, cream of the crop, 50 years, 5 decades of increased dividends. And then you get the Dividend Aristocrats. Well, you can tell they're pretty snotty too. 25 years of dividend increases to their shareholders. That's you and me, shareholders. When we buy stocks, we become shareholders. Then you get the Dividend Champions, another group of companies, 150 of them as a matter of fact, that have increased their dividends for more than 25 years. And then bringing up the tail end, we have the Dividend Contenders. 10 years to 24 years of increased dividends. So the 4 list I just gave you, let's throw in a bonus just for the fun of it, Warren Buffett's list. If it's good enough for Warren, it's good enough for me. That's the way I look at it. Now, like I said before, 9,754 different companies to choose from. Lovely. Half of them pay dividends, half of them don't. So if you're here for stock accumulation, you want your stock price to go up fast, you're in the wrong place. Sorry. I mean, I'm more than glad to have you here, great. But that's not the focus here. The focus is cash flow. I'm retired. I understand that there's a wide range of people here. Fine, great. But let me be clear. The focus is cash flow. Simple, safe, predictable, consistent, no way to lose. Now at 1% per week, that comes to over 50% per year. If you like that 50% per year idea, well, it's not going to come easy. I mean, don't get me wrong, it was created for a 9-year-old. So if a 9-year-old can figure it out, you should have no problem whatsoever. Now, when you see a video of me, I always start the same way. Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, the original 10-Minute Trader was my daughter. Okay, let's go here. Whoops. Let me show really quickly because I find it funny as hell every time I see it. I need a good laugh. Here we go for videos. The 10-Minute Trader on YouTube. You'll notice that that has been there for over 14 years. I'm going to take a look at videos. Go to the oldest. Here we go right here.
JC and B as you being part of my internet. Hi, I'm JC and B as you being part of my internet.
Isn't she adorable? Well, she used to be adorable.
Calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting for
20 days in the month of January. It's over 20 days in February. It's over 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
That part always cracks me up. It does. My daughter was 11. I had to keep her entertained. I had to make it fun. Okay, so we've been doing this. But look at it. Look, I got that nice brown hair, no hairline. Oh, damn. I was good looking back then. Shit. Anyway, reminiscing. So I've been doing this for a long time. Okay, that was 12 years ago. Believe it or not, I still have that t-shirt. Anyway, so simple, safe, predictable, consistent, no way to lose. 5 rules: never buy something you don't like, never sell at a loss, make sure the company's consistently profitable, weekly options are a must, and then the numbers got to work. Okay, the numbers. What am I buying it for? What strike price am I selling? What's the premium am I collecting? And is that over 1%? It's really not that difficult. Find your stocks. Remember the stocks I told you about? Give me a second, give me a second, give me a second. You'll see it in a second. Okay? Find a good set of stocks. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 companies, those 5 lists. Take a look. John Deere, Fifth Third Bank, Mendelez, U.S. Bancorp, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan, General Dynamics, Verizon, AT&T, General Mills, so on and so forth. Almost every single one of those companies you have heard of, you have grown up with, you understand who they are. Why the hell would you buy something you don't know? Okay, you guys have me look at stocks all the time. You want to see something weird? I'm old, okay, so I write stuff down. Look at all these stocks you guys have me take a look at every single night. Every night I write down all these stocks you guys want me to take a look at. It's full, all right? This is this week's right here. Okay, not that many, but it's getting up there. There's about maybe 80, 90 stocks on that list. Now, I look up a lot of stocks, but the only ones I trade, look, Kimberly-Clark. No, sorry, that's Kinder Morgan. Lowe's, Clorox, Caterpillar, Bank Mellon, AbbVie, Abbott Labs, Hormel, PNC Bank, Procter & Gamble, Bank Mellon, Lennar, MasterCard, Visa, Home Depot, Lowe's. Those are the only ones I trade. If I can get 1% every week from those companies, awesome. I think it's awesome. So when I say it's going to take you anywhere from 10 to 15, 20 minutes tops a day. So you just alter your day every day. Okay, great. You wake up just a little bit earlier. Okay, brush your teeth, take your shower, get your breakfast, sit down, take a look at your positions. The positions really aren't that difficult to look at. Okay, let's take a look at some of these. AAP, which is Advanced Auto Parts. AAP, good. What's the last couple of days look like? Interesting. 3-day drop. Look at that. Okay, down, up, right there. Okay, where am I with this one? Okay, right click, view trades. All right, I bought it at $40.35. I sold the 40s. I got $1.10. That's over 2%. Okay, it is out of the money, so I keep that money. I keep the stock, and I do it again next week. The same thing, week after week after week. Texas Instruments. That's funny. So, and then you just look at the next one. The next one is CVS. CVS. Okay, last couple of days. Okay, where am I with CVS? Okay, I bought CVS at 59. I sold the 58. It's at 56. That's going to expire worthless. Look what I got. $6.93. Evelyn, I was just worried about my calls not getting called, and then I have to stay in the shares as it's going down. Now, see what you can do is you can right-click. Now, I know it offered on Thinkorswim. I don't know how to do it on others. I know how to do it on only the accounts that I have. I have Thinkorswim, and I have Robinhood. Okay, if I right click, create a rolling order, and then I just roll my order from this week into next week, and I collect another premium. Okay, where are we? Okay, so I'm going to buy this week, which is the 8th of November, and I'm going to sell the 15th of November, and I'm going to collect a credit. Now, usually when you do that, you don't always get your 1% when you're trying to save a position, but it's giving me a consistent cash flow. Okay, so let's keep on going to where we were. Let's get out of here, go back to there. All right, let's go this way. Let's go back to there, and let's start taking a look at some questions. Okay, so being new. Holy shit, I got 37 questions. Okay. Didn't know we were doing dividends. Oh, okay, Jen. That's perfectly acceptable. Choosing a stock and watching how it pays out using a demo account. Well, these are okay. This is not a demo account. Oops. Yeah. And this one's not. Okay, now I do have a demo account. I have 6 different accounts. Okay, one is a demo account. Okay, Evelyn, hold on. I never tried rolling, but why is that better than expiration and then creating a new call? Well, I didn't say it was better. Okay, when you're rolling forward, you're buying this week's and you're selling next week's. So you're taking advantage of the stock price going down, which puts the value of the option going down. So you buy that one and you sell next week. Now, when you're selling next week's, okay, you're getting additional time throughout the weekend. So if I rolled today's Thursday, okay, I bought it back on Thursday, which means I miss out on Thursday and Friday of this week, but I gain Thursday, Friday of this week, and I gain the time value on Saturday and Sunday. Believe it or not, even though you can't trade on Saturday and Sunday, there is time value to a Saturday and a Sunday. That's probably a good idea. I don't know, but always check the numbers. Okay. Riley, roll it. Whoops. Okay, so if I'm going to roll this one right here, okay, if I'm going to roll this one right here, I'm going to buy back this one, I'm going to sell that one, look at the credit I'm getting. The credit I'm getting is 32 cents a share. Well, that may not sound like much, but look what the shares cost me. The shares only cost me $5.90 a share. So, but I'm collecting 32 cents. So what does that mean to you? Because it probably doesn't mean anything until I actually give you something to think about. So let's figure it out. Oops, I'll put it right over here. Okay, so if I'm collecting a 32-cent credit for next week, I put the 32 cents in here, and I'm going to divide it by what did I pay for the position in the first place. $5.93. Divide that by $5.93, and that comes with a grand total of 5.3% for that one position for 1 week. Now that usually makes up for some of the stock positions that I don't get 1%, because I don't get 1% every single week on every single position. Some positions give me 3%, some give me 5%, some give me 2%, some give me 1%, some give me less than 1%. But it's the consistency of the increased profits is the main focus that I'm looking for. I only want to invest my money into companies that are consistently profitable. Because why would I give my money to someone who hasn't proven themselves? I mean, you guys can do anything you want. You don't have to listen to me. In fact, you shouldn't listen to me. I have no training in this. I went to school of hard knocks. You know what that is? That means I make a stupid decision, I lose a shitload of money. I said, I ain't going to do that again. Why didn't someone tell me? Because nobody's there to tell you. Okay? I made a lot of stupid decisions in my past. Okay? I've made more in one day than most people make in a month. I have lost more in 1 week than most people make in a year. Trust me, I'm not going to make those mistakes again. You learn once and you just don't do it again. So no, I have no formal training, but I do know how to count. Okay, and I do know how to point. Well, here's the high, here's the low, here's where it was, here's where it is, here's the direction. Look, up, down, down. Its current price right now, 224. Okay, the closest strike price is the 250. The 250 is paying $1.08. $1.08 on a $22 stock, that's a 5% trade. It's not that difficult to read the numbers. But then again, you have to think, do I like this company, Intel, at this price? See, I have no problem taking a look at all these things for you. Somebody wants me to look at PLTR. I'm going to tell you right now, that's a no. PLTR is a no. I've been doing this long enough. You give me a stock symbol, I'll be able to tell you whether or not it's a good idea or not, based on this strategy. This strategy was created for a 9-year-old. It makes 50% or more per year, simply, safely, predictably. Okay? I haven't done very many other trades other than this for the past 15 years. Now, I've been trading for 20. My first 5 years were a little turmoilish. You like that word? Turmoilish. Yeah. Okay, so anyway, PLTR. PLTR. Okay, number one, I don't like buying at the high of the year. As a matter of fact, I will never buy at the high of the year. Okay? I like when a stock goes up, pulls back, that's where I want to buy on the pullback. She goes up, pulls back, that's where I want to buy. Goes up, pulls back, that's where I want to buy. Up, pull back, that's where I want to buy. Up, pull back, that. Not right where it is now. So number one, no to PLTR. But let's go see how PLTR has paid its dividends and whether or not it increases. PLTR. Okay, Plantair. Oh, look, no dividends. Why would you suggest a stock that doesn't have dividends when you're on a show that says dividend investing for weekly cash flow? If it has no dividends, it's a no. You could all say it with me together. That's a no. Whoops, it goes this way. That's a no. All right, anyway, let's get back to where we were. All right, let's keep on going. Hey, thank you. What are some of your favorites? Macy's, Nordstrom. Okay, look. You want to see my favorites? Check this out. You'll love this. Oh, let's go down this way. Faster. Whoops, that's too far. All right. Click on one of these. Macy's, General Motors, Ford, CVS. Okay, look. Macy's, 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 Ford, General Motors. Ford, General Motors, Macy's. Macy's, 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 Macy's. No, no Macy's, no Macy's, no Macy's. Macy's, Macy's, Macy's. What do you think? You think I like Macy's? That's my favorite so far this year. Macy's gives me an average of 2% a year. 2% a week. Do you understand what 2% a week is? 2% a week is over 100% per year. And it takes me 10 to 15 minutes. That's it. Okay, you guys don't like, share, comment, all that kind of crap, and it drops below 60. I'm going to reboot and start the whole thing all over again. Okay, what are some of your favorites? Already did. Okay, CSWC. No, what the hell? CSWC. No, it's a monthly. Don't you even, this is what I mean. It's so frustrating. You have your hard-earned money and you have no idea what it is that you're thinking of putting it into. What the hell is CSCW? Capital Southwest? It's a monthly. It's a no. I don't like monthlies. The numbers just don't work. That retains stock value. Okay, for that. MO, Adventures with Austin. Altria, hold on. Antonio, so sometimes you sell calls even when there's no dividend coming up. It all depends on the numbers, Antonio. Okay, now hold on, let's touch on that subject for a second. Now, the reason why one of the reasons why I like dividend stocks, this here is a dividend calendar. It's actually a regular calendar with a bunch of green dots on it. Well, it's in a trading platform. In a trading platform, the platform takes all the dividend stock companies that I like and it disperses them throughout the calendar based on when they pay their dividend. And why is that important? When they pay their dividend, let's say, look, yeah, Clorox and Lowe's pays a dividend on the 23rd. Well, that was yesterday. But if I wanted to collect that dividend, I would have to buy it before the EX date. Now, there's 4 dates to remember. Date number 1 is the announcement date. That's when the company says, hey, this is what we're paying. This is when we're paying it. Date number 2 is the EX dividend date. The last day the stock trades before the dividend pays out. Those little green dots. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. So, the EX date, that's these little green dots. Anytime before this date to collect the dividend. Now, stocks have a tendency to go up in value before the EX date. So, if I see a company that I like, Lowe's, it's paying out a dividend on the 23rd, I want to buy it 2 weeks on a Monday and give it 2 weeks to move, to make the move, because stocks go up in value just before the dividend. So if I'm looking at a calendar, the first week, these are the only stocks I want to look at. CHA, Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan. I don't care about anything else. Nothing. Because these companies are the only things I'm looking at. Now, you may think I buy a lot of stock. No, I don't. I buy maybe 1 or 2 a week. Okay? And then I'll sell 1 or 2 a week. And I'll just keep rotating the money wherever it makes sense to put my money. Now, if I know when the stock is paying a dividend, that means I know when the stock is going to go up in value, because they usually always go up in value just before the dividend date. So if I buy it here on a Monday, and then I sell somebody else the rights to buy it from me, and I collect my 1%. Now, do I care if the stock goes up 5, 10, 15%? No, don't care. That's not what I'm looking for. I'm looking for safety and consistency. I gotta throw simplicity in there also. So if I know the stock is going to go up, and I buy it at the market price, at the open, on a Monday, then I sell a covered call, selling it to someone for the exact same price I paid for it and collecting the premium. Because the premium is usually higher than the dividend. Usually. Okay? Right now we're looking at Comcast. The current price is $41.89. The closest one's going to be the 42. The 42 is paying 92 cents a share. That's over 2%. It's Comcast. Comcast was incorporated in the early 1960s. They got over 64 million customers, paying them every single month. Some of you probably paying Comcast now. Every single month, 64 million people are paying Comcast every month. Is that a good one to buy? Hell yeah. They pay a dividend and they consistently increase their dividend. If I buy it $41.89, if I sell it for 42, well, I get the difference between the $41.89 and the 42, which is what, 11 cents? Big deal. But then I'm collecting the 92 cents a share. Okay? And then you add the 11 cents onto the 92, well, now you're up over 3% for 1 week. You have any idea what 3% a week is over the year? Well, that's 150% per year. Who the hell makes that kind of money? Well, does it make sense? Buying a company that you know, Comcast, buying it at the current price, selling it at the current price through what is called a covered call. Now, here's the down part about it. Okay, stocks go up, stocks go down. That's all they do. If you think they do anything else, like if you think a stock is going to come to your house and make your bed, put little candies on your pillow and tuck you in at night, no, they don't do that. They go up, they go down. Look, up, down, up, down, up, down, up, down, up, down, up, down, up, down. Now, I honestly don't care if it goes up and down. No, no, no. I want week, 1 week at a time. So once you isolate it by a month, 1 month to the next, look at that pattern. Down, up, down, up, down, up. By isolating the pattern, I mean, almost anyone can tell that. Okay, where's the high? Right there. Where's the low? Right there. Where was it? Right there. Where is it now? Right here. What direction is it going? Look, down, up, down, up, down, up, down. It's not that difficult. It was created for a 9-year-old. You are all adults. If you can't understand what was created for a 9-year-old, I really can't help you. All right, satisfying slime time. My uncle on my dad's side is from Japan. He teaches at Cornell and always talks about options. Must be something to it, but it seems very complicated to me. Actually, it's not very complicated at all. Okay? Let me see if I can simplify it. Okay? I tell this story because it's easy. I grew up in the 70s and this sounded normal. Okay? Okay, think of your high school days, think of your partying days. Say you're at a party or a barbecue, family function, whatever, and somebody yells out, I'm going to the package store, anybody need anything? Someone says it all the time. Oh, I'm ordering pizza, anybody need anything? Yeah, pick me up some Comcast. Here's a 20, you keep the change. Same thing. Okay, same thing, similar, okay? You're buying something, whether it's beer, whether it's pizza. Someone is paying you, okay, because it costs a certain amount, okay, $41.65. Now, if someone's going to go out and get you a pizza and it's going to be $41.65, aren't you going to throw them something for gas money or the favor? You keep the change. Happens all the time. Or the tip, same thing. You're buying a stock, $41.65. The closest strike price to that is going to be the 42. Hey, bro, how did you learn order flow? Practice, dude. Practice. You do it long enough, just practice. Okay, back to the trade right here. 41.89. The closest one is the 42. The 42 is 92 cents. What exactly is 92 cents? Well, let's figure it out. 0.92 whoops. 92 divided by the purchase price, 41.89. That comes to a grand total of 2.19% for Comcast. Now, I'm buying it for a price and I'm selling it for the exact same price. Well, is it a good deal? Well, take a look. Take a look at Comcast. Up, down, up. That's the big overview. That's for the whole year. Well, let's take a look. Well, this year, Comcast was at, what, a year ago, Comcast was at 43.26. Way over here, 43.26. Okay, the high of the year for Comcast was 46.93. The bottom of the year, well, the high of the year was the end of January. The low of the year was the end of April, and that was 36.48 right here. Okay? So it's not at the high and it's not at the low. It's somewhere in between. Great. I really think Bitcoin's a scam. Please be careful. Plus, okay, all right, thank you. So that's a 1-year chart. Next thing I want to do, take a look at the 90-day. 90 days, last 3 months. Well, look at it. High, low, where was it? Where is it? What's the direction? That's easy to see. Okay, that's the 90-day chart. That's the last 3 months. Great. Well, what the last 30 days? Now, the reason why I like the last 30 days, because it gives me an idea of where it's going to be by next Friday. Well, today's Thursday. I usually don't buy anything on a Thursday or a Friday because I bought all my stuff on a Monday and a Tuesday. All my money's invested. Because it's like, somebody asked me once, he said, well, why is all your money invested? Well, I had a company before. Believe it or not, I was a CEO. Okay, I had 26 employees at one point in time. Now, it's like having all your employees in the coffee, in the coffee area, just chatting away, doing nothing. My money is the exact same way. Why would I have my money sitting, doing nothing? I believe in the American economy. I believe in America. Okay, I meet Bitcoin. Okay, I believe in Home Depot, Lowe's, IBM, AT&T, Cracker Barrel, Pizza Hut. Okay? So I want all my money invested at all times. Now, 98% of my money is invested at all times because it's consistently working for me. Okay, so where was I going with that? I do admit that I have adult ADD. I lose track of things once in a while. That's why I write stuff down. So where was I going? Oh, well, let's move on. So CSWC is a no. What retains stock value? That's an interesting question. What retains stock value? Do you still sell calls even when the market is in a correction mode? Of course I will. Okay, now, some people, I get this question every week. Well, what happens when the stocks get down? The stocks go down every single day. Look, here's the high, here's the low. Here's where it opened, it went up, it went down, it closed here. Okay? It opened here, it went down. It opened here, it went down. It opened here, it went down. Stocks go down every single day. They also go up every single day. Look, this one opened up here and it went up. This one opened up here, it went up. This one opened up here, went up a little bit. This one opened here, it went up a little bit. This one up, 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 up. They all go up, they all go down. That's all they do. So, she's talking about a recession or what do you call it? A pullback or a correction. Whatever name you want to call it. You can call it whatever you want. The stocks go up, stocks go down. Stocks go up, stocks go down. Okay? Now, if you look in the history of the stock market, in this United States, we have had a pullback, recession, crash, whatever you want to call it, every single decade. Every decade we've had some type of a pullback. Okay, stocks go up, pulls back, but on average, on the long haul, from the late 1800s to the early 1900s to where we are now, it's consistently gone up an average of 6 to 10% per year. Average movement per year. Now, we did have some years that were negative. We did have some years that were over 20, over 30%. But on average, 6 to 10% on average over the last 100 years to the upside. Henry, how are you doing today, Henry? So, that's what I was getting to. When the stocks go up, okay, some stock is going down. When stocks go down, some stocks are going up. So when a correction comes, let me ask you this question. Do you still need toilet paper? Do you still need toothbrushes? Do you still need toothpaste, paper towels, dish soap, laundry detergent, gas for your car, food, all those things? Even in a recession, you still need. Companies still working, still making money. Now, I remember in 2008 when that huge crash, companies lost anywhere between 50 to 80% of valuation. Okay, but you drive around, there's still people out driving around. There's still people at stores spending money. There's still people at the restaurants spending money. Yeah, we don't get held back that often. Okay, we're Americans. We trudge forward no matter what. Anyway, besides the point. So no, I don't worry about recessions because as they're pulling back, remember rule number 1, never buy something you don't know, you don't understand, or you don't want to hold on to for a long period of time. Always buy as if you're going to hold it on to your rest of your life. Now, if the company is consistently increasing their dividends, such as the Dividend Kings, you have some companies that have increased their dividends for over 7 decades. There's a couple of companies that have increased their dividends for over 7 decades. There's one company that's over 200 years old and still pays dividends. Okay, so what has happened in the last 100 years? Okay, you have Bank of America, Ford, General Motors, Coca-Cola, Pepsi, AIG, Wells Fargo, and a bunch of others that are over 100 years old. Hold on. You look exactly like the guy from Fox News, thank you, the Great American, blah, blah, blah. Okay, and you stole. Okay, great. So, as I was saying, hundreds of companies are over 100 years old. So what have we seen in the last 100 years? Well, we've seen World War I, World War II, Korea, Vietnam, wars in the Gulf. We've seen the Great Depression. We've seen the stock market crash. We've seen the Dust Bowl. We've seen the oil embargo in the 70s. We've seen the crash of 22. We've also seen the dot-com bust. We've also seen Y2K. We've seen the pandemic. We've seen the financial crash of 2008. We've seen a lot of shit in the last 100 years. Yet, you got a handful of companies, a lot of the Dividend Kings, that have consistently increased their dividends, even through all that stuff. Even through all of it. All that crap, and they're still increasing their dividends, and they're still profitable. What does that tell you? Well, it tells me to buy a good quality company. Can I actually picture a world where Coca-Cola no longer exists? No, I can't do it. Or how about Procter & Gamble? Or General Mills? What's the effect of the American election on the dollar market? US dollar? Dude, don't bring politics into it. Seriously, I don't do politics. You're not gonna like what I say. Okay, so anyway, consistency and profitability is my main focus. And if they have weekly options, great. It allows me a safe, predictable, consistent 1% per week. Never buy something you do not plan on holding long term. If it sells within a week and you get a profit, great. Because here's something, you never go broke taking profits. And if you can get profits on a weekly basis, great. Nobody ever went broke taking profits. Okay? Now, I've been trying to drill into my kids' heads for years. Profits are better than earnings. You can go to work and you can work 40, 50, 60, 80 hours a week. Okay? You are getting paid for your time. So you're actually trading time for money. But profits is a different story. Because how long does it take me to take a look at the company and say, oh great, I'll do that. Yep, not a problem. Well, I just made a profit off of that. What did I do? Not a whole heck of a lot. Profits are better than wages. So I tell my kids, start something, create a business. You mean you don't even take events in consideration on your trading strategy? I don't know which events you're talking about. The events that I look for are Christmas, New Year's, Thanksgiving, spring, summer, winter, fall. I want to know what stocks are going to move at what time of year. Okay, Weight Watchers goes up every single, in the beginning, first couple of weeks every single year. Why do you think that is? Why does Hershey's go up first week of February? Well, you have Valentine's Day and then you have Easter right behind it. Certain stocks move predictably every single year at a certain time. If you know this information ahead of time, then that's a great. Now, I like using dividend stocks because dividend stocks are predictable. Okay, stocks only move for two reasons. Only two reasons. It's going to be a known reason, which we know, which we can plan for, and an unknown reason. What the hell's an unknown reason? An unknown reason is an event that happens that nobody knows anything about. Hurricane, tornado, flood, okay? Someone getting assassinated, someone getting, somebody dying, a lawsuit. Do you remember when the Exxon Valdez crashed up in the Northwest? Nobody knew that was coming. Or how about when British Petroleum sprung a leak in the Gulf? Nobody knew that was coming. Nobody knew those events were coming. Those are unknown events. But it did create a movement in the stock. Okay, you can't plan for those. But you can plan for known events. Known events are earnings, dividends, okay, company announcements, holidays. Yes, holidays, seasonality, winter, spring, summer, fall. Certain companies react differently in the spring than they do in the fall, in the winter as they do in the summer, because certain factors outside of the man-made crap affects certain companies. And if you know that ahead of time, if you can plan for that, well, great. Pick a stock before it goes up. Buy it at the current price. Sell a covered call. It's one of the safest strategies there is. Satisfied slime time. How about earnings? If you sell a call, you expect the share price to go up. But what if the earnings is bad and the share price tanks? I've been waiting for someone to mention something about earnings. Really, I have. Because I got a trick up my sleeve. Alrighty. Oh my God, that's an awesome explanation. Awesome example. Wait till you see this. You think positive earnings will make a stock go up? Well, what happened right here? Look at this. What happened there? This is Harley Davidson. Harley Davidson had its earnings yesterday. Okay? The earnings were higher than expected earnings. Do you hear that? Higher than expected earnings yesterday after hours. So what happened this morning? She opened up higher, but look at this. By the end of the day, she's way the hell down there. Now, I got a bunch of Harley Davidson. I don't care. I'll hold on to it. Because Harley Davidson gave me 3% this week, gave me 3% last week. Now with this big drop, I have no idea what it's going to give me next week. Seriously, I don't. Because was I expecting this? Nope. Who would have thought positive earnings would have made the stock go down? So yeah, earnings are a known event, but I don't pay attention to earnings. The reason I don't pay attention to earnings, because I've seen positive earnings where stocks go down, and this thing went down today. The earnings was yesterday. So yeah, I don't pay attention to earnings. So would you avoid selling a call on Harley Davidson knowing about the earnings, but do you love the sound of the Harley Davidson? Yeah, okay. So I like Harley Davidson. It's been around for over 100 years. They've consistently increased their dividends to their shareholders. Okay, they are an American icon. They are an iconic company. All right, you cannot buy the iconic statue that Harley Davidson represents. Same thing with Macy's. Macy's has been around for over 100 years. Name recognition worldwide is crazy. But anyway, that's besides the point. Look at Harley Davidson. Okay, look at the whole year. Okay, last year she opened up a year ago. 29.46. That was a year ago. The low of the year, that was a couple of weeks later, at the end of October of last year. 25.47. But what happened then? Well, then she jumped up, pulled back, up, pulled back, up, pulled back, up, topped out right there. Okay, right there. Just so happens to be 44.33 in the middle of March. So the middle of the March was the high of the year. Well, then she came down. Then she went back up. Then she came down again. Well, what do you think it's going to do next? Come on, I can get a third grader to say, oh, it went down, it went up, it went down, it went up, it went down. Well, what do you think's coming next? It's going to find a bottom. Eventually. Turn around and go back up again. So the question should be asking is, do I like Harley Davidson? Do I like Harley Davidson at this current price? Because when it finds its bottom, let's look at the last 30 days. All right, here's the last 30 days. Up, down, up, down. What do you think's coming next? Up. But it's not going to go up until it finds the bottom. Is this the bottom? Or is the bottom going to be tomorrow? Or the next day or the next day? Now, I won't buy this again. No, I already own some. But I won't buy any more until it finds the bottom, turns around and goes back up again. Then I will jump up a little bit more. I already own some now. I'm okay with it. Because I made I made 3% the first week, 3% the second week, and I made another 3% this week. That's 9%. That sets me up for 9 weeks of doing nothingness. Well, if this is what happened in 30 days, 9 weeks is another month and a half. That's I don't even know how many days. What is that? It's 45 days. Okay, this is 3 weeks. This is 4 weeks. So another 6 weeks. What do you think it's going to be? Well, it's definitely going to be above the 35. Because I'm into it at 35. Okay. Okay. Now it's at 31.67. Did I lose money? Only on paper. What if it goes sideways and down 2 years? Do you just keep it anyways? Thanks. Okay, satisfying, I forget. Okay, remember rule number 1, never buy something you don't understand. Okay? So, if I look at the stock, okay, unfortunately, TD Ameritrade, not TD, it used to be TD Ameritrade, but Thinkorswim only has 1 year. If I want to look at more than 1 year of information, I'll have to go to a different charting thing. And I don't really need it. Okay, I like Harley Davidson. I have no problem holding on to it. Look at the year. Okay, the bottom of the year way here. Up, down, up, down. Well, where does it go next? Usually turns around, goes back up again. Usually. Okay, can I wait it out? Yeah, I can wait it out. I don't have a problem with it. I keep rolling it forward. What do we got? Hold on. Let's get out of that one. Let's get out of that one. Let's go back to here. Here's Harley Davidson right there. I'm into Harley Davidson at 36.27. Okay, so I'm into it at 36.27, which is, well, let's get out of that. Way too much. HOG. Okay, 36. I'm into it at 36 right here. Whoops. Let's open that up again. Okay, I'm into it at 36.27. I sold the 36s, collected a $1.57. That's over 3%. Now I could roll it forward and see what it's going to offer me. It's probably going to be crap because it dropped so much. Yeah, look at that. It's offering me 5 cents for next week. Yeah, I'm just going to let it expire. I'm not even going to bother with that one. And then I'll see next week what it's going to be. Because we have all day tomorrow. All day is Friday. See what happens. More than likely, it should go up. Can you explain your 3% profit? Mikey Hatcher, can I explain my 3% profit? Well, all right. Well, let's explain my 3% profit. All right. Do you see this here, Mikey? It says 10/21. That's the date. How many shares I bought? 1,000 shares. What did I buy it at? Okay, 1,000 shares. What did I buy it at? $36.27. That's what I bought it for. Okay? Then I sold 10 contracts at $1.57 per share. Okay, so remember those two numbers, $1.57 and $36.27. $1.57 divided by 36.27. So my profit, $1.57 per share. What did the share price cost me? $36.27. What does that equal? Oh, sorry, my mistake. It's 4.3%. What question do we have here? What's your line or threshold or expiration for rolling? Is it 1% on the new call? Unfortunately, I can't tell. Not that I can't tell you, it's just that I don't know. Because see, when you roll anything forward, this is Kohl's, all right? Kohl's is offering 11 cents. Well, the stock price is 28. I am into it at 32. See, 11 cents on 32, yeah, that's not 1%. Okay, so let's get out of that one. Let's take a look at, Advanced Auto Parts. Okay, Advanced Auto Parts. I jumped in at 40. Well, the current roll price is 27. So that's not 1%. Sometimes it gives me 1%, sometimes it gives me more, sometimes it gives me less. Depends on a lot of different things. Okay, so now we're getting into areas that are a little bit more complicated that I didn't go over with my daughter. Okay, time, what's your K? Enough of that. So let's go back to where we were, back to my training account. This is what I do most of my training with. Retains faculty. That's smart. Oh, shit. 83 questions. All right. Adventures with Austin. Altria, huh? M-O. I'm going to do this really quick. Ready? High, low. Where was it? Where is it? What's the direction? Up, down. We're sitting at 49.97. The closest one's 50, 79 cents. That's a 1.5%. See how quick that was? 1.5%. Well, 49.47. What's 1% of 49.47? Well, it's 49 cents. Just move the decimal point over. Okay, 49 cents. What is it offering me? 79. Well, what's 79 cents? What's 79 cents of 49? It's over 1.5%. See how quick I am with that one. Clear. Okay, so 79 cents divided by 49.97. I was close. It's 1.58. Not 1.5, 1.58. I was close. Anyway, so that's Altria. Okay? High, low, was, is. What's the direction? Cool. There's the numbers. Let's take a closer look at the chart. Because remember, when I say do the numbers work, remember rule number 5, make sure the numbers work? What am I buying it for? What am I selling it for? Well, that is over 1%. Okay, that's easy. Okay, a year ago, we were at 42.41. We bottomed out the end of October of last year, and that was 39.06. Well, had a nice run up to the high. Look where the high is. September 5th. There's the high right there. 54.95. Okay, from there, she drops, retrace, drops, retrace, drops, retrace, drops. Here's the new bottom. Look at that. 30-day high, 30-day bottom, 1, 2, 3, 4 days to the upside. Where do you think it's going next? I like 2 days to the upside, personally. Drop down, 1, 2, 3, 4. 4 days to the upside. She's definitely going back up. Great, great opportunity. So the $50 one is paying 79 cents. That's 1.5%. I'm going to write that down for next week. I like that one. MO, and I'm circling it for next week. All right, that being said, let's move on to something else. So it should be that simple, okay? Find a company you like, Altria, okay? Look at the chart, perfect opportunity, 30-day high, 30-day bottom, 4 days to the upside, okay? What am I buying it for? $49.97. That's less than 50 bucks. Okay, the $50 is going for 79 cents. That's 1.58. That's a 1.5. What's a 1.5? Well, that's around 70% per year. I could deal with 70% per year. That's more than I'm doing. All right, so that being said, let's look at some more. Cover calls, yes. CSCW, no. FANG stock, really? FANG? I never heard of it. Yet you want me to look at it. Anyway, this is exactly what I mean. People want me to look at stuff I've never heard of. 185 bucks. Okay, so before we even go any further, considering I've never heard of it, well, let's take a look at the dividend payments on Yahoo Finance. FANG. You should always have at your fingertips places you can get information. Okay, information you need in order to make a good decision. So here's FANG stock. Okay. This is a big fat no. Why is it a big fat no? Look at the dividend. They started paying dividends in 2018. Wait a minute. 2018 is not 20 years ago. That's 6 years ago. What the hell do you think? Don't you know how to count? Why do you have me looking at something that doesn't fit? When I say 2 decades, that's 20 years. 2 decades of increased dividends. Yeah, okay, see, satisfying slime time, I don't look at yearly performance. I don't. I look at weekly. Weekly is totally different than annualized. I don't, see, they're thinking you're going to put your money into Altria, leave it there for the whole year and collect 8%. Hey, more power to you. If that's what you like, not a problem. I'm not offended, okay? This is just another sandbox to play in. You don't like this sandbox? Fine. Well, this sandbox gets 50% or more per year. You don't like it? Go play in another sandbox. It's actually that simple. Okay? So, take a look. The 18th, 2018. That means they only have 6 years of dividends. That's not even close to what I'm looking at. Okay? I'm looking 20 years. Okay? 6 doesn't even make 10. Screen too bright in the background. Yeah, I see that. I have no idea how to fix that. Okay? If I played with it long enough, I could probably fix it out. But here's the thing. Uh-oh. But if the call doesn't hit the strike, I might have to hold it for a long time. So the dividend would be nice benefit. Yeah, but why would you buy a company that only has 6 years worth of history to it? Okay, most companies don't get past 5 years. Okay, 1 in 1,000 will get to 5 years or 10 years. Yeah, wait a minute. I don't know the numbers, but it's something like that. 3 to 5 years is the maximum. Most companies don't make it 3 to 5 years. Most new companies. Okay, then the next threshold is 5 years. The next threshold after that is 10 years. And that's like 1 in 1,000. 1 and 1,000 new startups will make it to 10 years. This one's not even at 6. So why would I put my hard-earned money into it? For me, it's a no. For me, it's a hell no. What the hell are you thinking type scenario. Okay, I like 20 years of increased dividends. There's over 300 of those companies. Why would I look at one that doesn't fit? I mean, I love going to the shoe store and looking at shoes. If they don't fit, I ain't gonna buy them. It's so ridiculously common sense. It's silly. Okay, so let's keep on going. You're watching on YouTube. Cool beans. We are listening to you in stereo. Huh? That's funny. Caden Mills, what's up? Ooh, Tesla, you're new here. I don't like Tesla. They don't pay dividends. They're a no. Then why did you add it to your list? MO, I'm confused. Wait a minute, MO is Altria. Altria has been in business for over 100 years. They are a dividend king, which means they've increased their dividends for 5 decades or more. I never said no to Altria. We're looking at FANG at the moment. FANG is a hell no. Got to keep up with what we're doing. Keep up. All right, anyway, let's keep going. What's your holding turnover? I hold until I sell at a profit. Okay? Rule number 1, never buy something you don't like or you don't want to hold on to. Make sure you buy it as if you're going to hold on to it forever. Rule number 2, never sell at a loss. Let's keep on going. I don't do Tesla. Thank you for that. See, Miami, thank you for that. Are you doing options? Yes, we are. CSCW. Stop asking that one. Ooh, Ford, one of my favorites. Last year, Ford was my favorite. This year, it's Macy's. Let's take a quick look at Ford. Now, I'm sure we all heard of Ford. Okay, they've been around for over 100 years. I can't imagine a world where Ford no longer exists. Okay, so high, a low, where was it, where is it, what's the direction? Look, up, big drop, up, 11.23. So if I buy at 11.23, I can sell the 11.50s, get 33 cents. That's just a smidge below 3%. I like the idea of using strategy, thanks. It's like I will only sell a call option if I want to own the stock. Okay, not quite sure, but okay. I'm glad it's working out for you. So, do I like Ford? Well, yes, I do. There's reasons why I like Ford. Number 1, they've been in business for over 100 years. Number 2, the book value of Ford is higher than the strike price. Well, right now, the price is $11.23. The book value on Ford, I believe, is 14. Let's take a quick peek at it. For that, we come to statistics. Hit statistics. Slide all the way down. Current book value. Oh, 10.98. They dropped a little bit. Oh, well. 10.96 is the book value. Well, the current stock price is more than that. Okay. So let's keep on keeping on. Newmont. Is that N-U-E? Anyway, so Ford, check it out. Now, I told you I was going to do some examples. Let's do an example with Ford. We all know who Ford is, and Ford's only at $11.23. I'm pretty sure we can all afford $11.23. Okay, first thing I want to do is get rid of the chart because I don't need it. Tesla's a no, dude. Sorry, I don't do Tesla. They don't share their profits. They have no dividends. That's a no. All right. So I want to change this from single to covered calls, and it sets it all up for me. I want to do the 11s. Okay. Let's do just 100 shares so we don't freak anybody out. Okay. I like market order. And here is what, and here's Johnny. Okay, buy 1 covered call on Ford 100s. Those are the weeklies. 1 November 24. That is next Friday. So if I buy this tomorrow morning and I sell this option is going to expire next Friday. The $11 call, we already talked about this. on Ford at the market price to open to open. Why does it say to open to open? Well, one, you're opening a stock order. I'm buying 100 shares. Number two, I am opening an option order. I am selling a covered call against the Ford stock. All right, great. My break even, 1064. What does that mean, break even 1064? Well, as long as the stock stays above 1064 by next Friday, I'm in a profit. Anything below 1064, I start to lose money. Now, I don't lose money if I don't sell. Now, when I sell the option, that's going to expire. We don't really care about that. But the stock itself, if I never sell the stock, I won't lose. Okay? So, that's my break even, 1064. Well, here's my maximum profit. Now, remember when I said I like simple, safe, predictable. See, it's actually telling me what my profit is going to be. Before I even do the trade, it's telling me what my profit is. Okay, so this is that set it and forget it type scenario. So let's bring up that calculator again. $35.50 is my profit. Okay, and then how much is this trade costing me? Well, cost of trades plus commissions, $1,065. So I divide it by $1,065 and it gives me a, is that right? 3.33%? That's a 3% trade on Ford. 3% for 1 week. Now, for those of you guys who don't know, the screen behind me is live and being recorded on YouTube. So if you ever want to go back and listen, what did he just say? You can go back and watch the video over and over and over again. And you'll see there's over 100 videos that are all about 2.5 to 3 hours long. Have fun. You know what I mean? So every live event that I do is recorded on YouTube. And you can go see all the live events that I've done, and they're all available. So if you ever have a question, what did he just say? Go to YouTube, watch it over again. Okay? So, Ford, 3.3% trade. You bet your ass I'm writing that one down. I'm going to do that one on Monday. Well, of course, I have to wait till Monday gets here. Then I got to take a look at are the numbers going to change. Okay, let's get out of here. Let's get out of here. Let's get out of here. Let's go back to here. And let's do another one. Woohoo! Okay, so that's Ford. I like Ford, but what am I a little bit leery about? Well, let's look at the last 30 days. This is what I'm a little leery about. Ford is at the 30-day high. I don't like buying at the 30-day high because it is ripe for picking. Profit taking. Look at the bottom down here, $10.40. Well, now it's at $11.24. Okay, so from $10.40 to $11.24 is an 80-cent move. That's not a lot. Wow. 10, 20, 30. Wait a minute. 10, 20, 30, 40, 50, 60, 70, 80, 85, an 8% increase. It's an 8%. Could there be profit taken? Well, I take profits after 1 or 2%. This is an 8% move. Okay, will there be profit taken? Don't know. Could it go up? Don't know. That's the risk you got to take. Ask that question. No, I'm not going to buy it because it's at the 30-day high. I don't buy it at the high. I'll wait for it to pull back. Okay, after the profit taken, then I'll jump in. Okay, Trader Kev wants to look at Newmont. Now, this is a 50-50 shot because it's NUE, NEE, and NEX. Which one is it? Isn't it NUE, Newmont? NUE. Am I right? NUE? Newcourt. Damn it! Newcourt. What's Newmont? Who knows Newmont, the ticker symbol? 95 questions. Would you please look at McDonald's today? After the E. coli situation, its numbers NEM. Damn it. Thanks, 86. NEM. Newmont. Damn. Okay. That's going to be a no for this week, but we'll take a look. A year ago, 36, we bottomed out at 30, shot up to 58, dropped all the way down to 49. Okay, it's going to be a no, so we're just going to be wasting our time looking at it. Okay, but I will write it down for next week. Why am I writing it down for next week? Well, with a drop like this, a gap down, number one, it gapped down, and it kept on dropping. With a drop this big and that much volume, see the volume behind it? Let's change charts for a second. Okay. Down here is the volume. These little blue dots down here. There's the volume. Now the average volume on this is right around 7.3 million. Okay, so what was the volume today? 37 million. That's a huge jump. All right, satisfying slime time, SO, Southern? Yeah, no, I don't do Southern. That's a no. Sorry. Look at the volume spike. Huge drop down. The big, huge gap here. See the gap? And this big, huge drop? More than likely, this thing is going to turn around first thing in the morning. The most likely it's going to open up higher than that. See the conference call was yesterday. Okay, earnings, 83 estimate, 81 actual. Okay, so this is bad earnings. That's what this is. Negative earnings. The stock dropped. Well, we had negative earnings on Harley Davidson. Okay. Oh, where's my earnings? Shit, it's not there. Okay, earnings. Estimated 81, 91 actual. So Harley Davidson had positive earnings and the stock dropped. Newmont had negative earnings and the stock dropped. They both dropped. One had positive earnings, one had negative earnings. Why did they both go down? I don't pay attention to earnings because they just don't always accurate. So earnings is a coin toss, but either way it goes up drastically up or drastically down. Yep, that's usually right. Okay, so let's go back to where we were. Newmont, N-E-M. Okay, so Newmont, here we go. Yeah, more than likely, okay, more than likely there is going to be an upward trend tomorrow on Newmont. Only because you get this big gap here and a big huge drop down and a huge amount of volume. Okay, so it's not guaranteed, but it's usually that way. Juan, SMCI, dude. SMCI, no thank you. Oh wow, I missed all these questions. Why do you care about the dividends if you're in and out in a week? RGP, why do I care about the dividends if you're in and out in a week? Well, don't get me wrong, I get that question often. Seriously, I do. Why do I care about the dividends if I'm in and out in a week? Well, here's the thing. If I know when a stock is going to move based on when they're paying their dividend, because just before the dividend, the stock has a tendency to go up. So I like to buy 2 weeks before the dividend on a Monday. And if I know the stock's going to go up, I can get in and get out with my profit within 5 to 10 days. If I don't get it week 1, I'll most likely get it week 2. If not, I'll do it again week 3 and collect the dividend. So let me show you that again in a little bit slower. Okay, so here's Lowe's, okay? The dividend for Lowe's is $1.15. If I'm going to buy Lowe's, me personally, hold a second, Have you ever accidentally collected a dividend using your strategy because of the Yep, happens all the time. I buy a stock. If it doesn't hit my target, I have to roll it over for the next week. If it doesn't hit my target the second week, I got to roll it over the third week. And the third week is usually when I collect the dividends. So every once in a while, money will just show up in my account because I forget about it. Because I don't really concentrate on the dividends. I only use them to tell me when a stock is going to move. So when a stock is going to move, that's when I jump in, take a look at it. If everything looks good on the chart, then it's usually a yes. But as we're talking about lows at this moment in time, the 23rd, 2 weeks before the 23rd is the 9th. And then on Monday would be the 7th. So let's put lows, put my little theory to the test. Whoops. L-O-W. Okay. Oh, they're already here. See that? The dividend right here. See it? Okay, just before the dividend, stock goes up. Dividend right there, just before the dividend, stocks go up. Oh, look at this one. Didn't happen. Okay, just before the dividend, the stock went down. I didn't take a close look at that one. This one, just before the dividend, the stock went up. Stocks go up just before the dividend. Usually. It's not guaranteed, but it's usually. But it goes hand in hand. If they usually go up just before the dividend, great. If it's a great company, great. Is it the right time to buy? For this one, no. Look, here's the high. Now it's coming back down. It's a no. Even though I do like lows, I usually buy lows in the first quarter. Or the first few weeks of the quarter. So let's go back to where we were. All right, so hopefully I answered that question. Why do we care about dividends? Because a dividend will tell me when the stock actually goes up in value. That tells me when to look at it. Number two, worst case scenario, if I'm stuck holding a stock, I want that little tiny bit of comfort knowing that the dividend increases every single year. When can I buy that shirt? You know what? I keep meaning to put the shirts available online because we got a couple of them. You know, one is, that's a no. What the hell are you thinking? Another one is, but wait, it gets worse, because it does. And there was one more. There's a third one. I forget what it was. Someone came up with a really cool slogan. All right, so let's keep on looking. Can you then do a covered call right away and make money? Well, Shane, that's exactly what I'm telling you. Okay. Let's look at this for a second. Let's go here. Let's go here. And then here. Let's look at this one right down here. Advanced Auto Parts. Okay, look. See this over here? Very important. Shane, take a look at this right here. Okay? 10/21/24. Okay? That was the 21st. That was a couple of days ago. I bought 1,000 shares of Advanced Auto Parts, $40.45, 35 cents per share. I sold the $40 call, which gives someone the right to buy it from me at $40. Look at the time I did it. The exact same time. I bought the stocks, I sold option at the exact same time. And I collected $1.10 per share. See that? $1.10 per share on 1,000 shares. That's $1,100 just on that one trade. Well, as long as the stock stays above 40 come Friday afternoon, what the hell is this one? AAP. Oh, there it is right there. Not the greatest example, I do admit. Hold on. Most people are watching Netflix right now. We're learning from Mr. James. I'm glad you like that idea. Okay, so this one I sold the 40s on Monday. Okay, right now it's worth 37. Stock shot up. Wait a second, Paul, hold on. Stock shot up too fast. Will take me a while to work up to the strike. Thanks for you showing me the roll. All right, Paul, glad that works. Paul, let's talk about that tomorrow. Remember, tomorrow we're on at 2. All right, so this one here, I bought it at $40. I'm sorry, $40.35. I sold the 40s, which means anyone can buy it from me between now and day of expiration at $40. Well, at the moment it's at 37. So this option is going to expire worthless. I've already collected my money, which means I bought it for $0 and I sold it for $1.10. Okay, anytime you open a trade, you have to close it. Okay, expiration means they expire. You close it at 0. Okay, it's kind of cool if you think about it. I sold it for $1.10. Now it's worth nothing. So I actually made $1.10 off of my investment. However, next week I get to sell the 40s all over again. Well, let's find out what it looks like. So next week's 40s, let's get out of that. Let's get out of that. Next week's 40s are only going for 26 cents a share. Well, that's not good. So maybe I'll push it up a little bit. I'll sell the 39s and get 48 cents because 48 cents is 1%. But it's 4 strikes out of the money. So it's currently at 37.33. So if I sell the 39s, I'm getting my 1%. But I'm locking it in at 39. So between whenever I sell that on Monday until Friday, whoever bought that option from me for 58, because they're paying 58, I'm getting 48. Someone's making money there. But that's over 1% for me, which is what I'm looking for. But my risk is I bought it at 40s, whatever I bought it at. And then I'm selling it for $1 less than what I paid for it. But not really, because I got a nice premium last week. I get another premium this week. It's out of the money, good or bad? Yeah, it is. It's neither good nor bad. It just is what it is. So I will collect this premium along with the 110 I've already collected, add those up together. I can take a loss on it, but it wouldn't be a loss because the 2 premiums I collected last week and this week kind of offset that. But it's only a problem if the stock at the moment jumps up over 39 by next Friday. It might not. But I look twice a day. I look Monday, I look in the morning, and I look in the afternoon. So if I'm selling the 39s next week, I'll be keeping my eye on it to make sure I don't lose. Because if it gets too close, I will roll it forward and collect another premium. Let's see what a roll forward looks like. It probably doesn't look very good because it dropped so much. Which one are we talking about? AAP. All right, so I roll forward on AAP. It's only 27 cents a share. Okay. Well, if I bought it at 40 cents and $40 a share, 27 is just under 3/4%. Well, I'm okay with 3/4%. But if I go to the 39s, I'm over 1% again. See? Right now, if I buy back the 40 and I sell the 40, well, I'm only getting 27. But if I change this, 39.50, well, I'm getting 36 cents, not quite 1%. Well, let's change it from the 39.50 to the 39. Well, now I'm getting 51. That's over 1%. That works for me. So I can confirm and send. Okay, that's the trade right there. And maybe that will fill tomorrow morning, or maybe it won't. If it fills, great. I get over 1%. Okay, let's get back to where we were right here. Take a look at some more questions. AIQ, Chuck, I have no idea what AIQ is. AIQ. Global Fund FTX. That's a big fat no, dude. All right, can you buy a stock and then do a couple? Yeah, you do that instantaneously. Are you saying quarterly dividend stocks don't go up and down much? That's why you stick to them? That's not quite what I said. I said Okay, when a company pays a dividend, they have a bunch of options that they can do. They can pay once a year, they can pay twice a year, they can pay 4 times a year or quarterly, or they can pay every month, which is monthly. Okay, I really honestly don't care when they pay their dividends. Really, I don't. I care about the consistency of the increase of the dividend, whether it's 1 penny, 5 pennies, 10 pennies, $1, $2, whatever it is, as long as they are consistently profitable year after year after year. That's all I care about. Now, what I'm saying, I don't like monthly options, is what I don't like. So let's keep on going. AIQ, never heard of it. It's a monthly optional. I don't like it. I'm very confused. How do you get 1% per week? Oh boy, didn't we just go over this? Okay, this is target. High, low, where was it, where is it? Look, down, up, down, it's going up again. Currently it's at 150. What is 1% of 150? Seriously, what is 1% of $150? 1% of $150 is $1.50. If I'm buying it at 150, I sell it to someone else for 150. What am I collecting? 252. So let's get the calculator out. Clear that. We get 252. Now, if I buy it at 150.25 and I sell it at 150, I'm losing 25 cents per share. Okay, so I'm going to take it out of my profit, 252. Subtract the 25 cents. So now my profit is only $2.27 per share. So if I have 100 shares, it's $227. Okay? If I have 1,000 shares, it's $2,270. Okay? It's per share. Okay, that's the profit. What is it costing me? It's costing me 150. Well, you say, no, it's 150.25. No. I already took the 25 cents out of the equation where I subtracted it from here. So now I'm 150. So divided by $150, and that equals 1.15%. No, 1.51%. Sorry, 1.51%. So you want to know, how do I get 1% per week? Well, this trade right here, Target. Now, I'm sure you know who Target is. They've been in business for over 100 years. They are a dividend king. They have increased their dividends to their shareholders for more than 50 consecutive years. Okay? The chart is telling me up, down, up, down. Now it's going back up again. Okay? Great time to jump in. It's not a recommendation. It's not a tip. It's just reading the numbers. So how do I get 1%? I'm buying it at 150. I'm selling it at 150. I'm collecting a premium of 252, and that is 1.5%. Oh, even if Kamala Harris is elected, I still will be investing in learning about options. Well, thank you kindly. Okay, so that's how I get the 1%. Okay, what am I buying it for? What am I selling it for? What insurance premium am I collecting? Okay, the question you should be asking yourself is, do I like Target? Do I like Target at this price? Do I like Target at this price for me to hold for a long period of time until it hits my target? Well, what's my target? Well, my target is 150. I bought it for 150.25. I'm selling it 150. I'm collecting this as a premium. Think of it as gas money or tip money. Hey, I'm running a store. You need anything? Yeah, pick me up. Some yoo-hoos. Here's some money. Here's some gas money. Here's your tip. Same thing. Okay? I'm doing you a favor. I'm buying this Target for you. You can come pick it up on Friday. Okay? For that privilege, you're going to give me an extra $2.52 per share. So what if the stock jumps up to $300? Well, great. You're still going to pay me $150 per share. That's why people do it. Because if it's this price right now, Who knows what it's going to be next Friday when this option expires? So, do you ever select a strike lower than the share price? Yes, I do. So, I have a couple of options. Yeah, it's funny because they're called options. If I buy it at 150.25, I can choose to sell it at 152.50. I can sell it at 155. I can sell it at 157.75. I can sell it for 148. But then what am I collecting? Well, at 148, I'm collecting $3.70. Okay, if I'm selecting it at 60, well, I'm only getting 14 cents. But if it goes above 60, I get that extra 10 bucks plus the 14 cents. It's all a math problem. Okay? Okay, the best bet, don't confuse yourself. Keep it as simple as possible. Let's going to reboot. I mean, this is silly. So you guys don't go anywhere. I'm going to reboot, and then we'll do this all over again. Okay, hold on a second, guys. I'm going live again. 1, 2, 3. Ah, you're live. Yay. All right, so let's get going again. We got some more questions over here. Let's take a look at the questions from YouTube. All right, YouTube questions. All right, we're live. Yay. All right. Please, can we take a look? The topic you are talking about. I came late. Cyber Talk. We're talking about investing in dividend stocks for weekly cash flow. Pre-qualified dividend stocks. These are companies that have consistently increased their dividends for more than 2 decades. Every year, higher and higher and higher dividends. Because I want a safe, predictable, consistent, no way to lose trading strategy to collect 1% per week. 1% per week is over 50% per year. Okay, so don't think it's going to come easy. It's going to take 5, 10, 15 minutes a day. Once you learn the strategy, it shouldn't be more than 5 or 10 minutes a day. If 5 or 10 minutes a day for the whole week, you're talking about an hour a week. About an hour a week to make a 50% rate of return. Now, if you only have a couple of $1,000, maybe 50% is not going to be worth it for you. But if you have hundreds of thousands, well, 50% an hour a week, that's freaking amazing. Lola and Bella, what's happening? Anderson, Frank, Felix, King, how are you? Now, I like to reboot, get some more people here. Why does the value of my call option fluctuate and is currently showing negative return? Well, Julian, as the stocks move up and down, well, so do the options. If the option you bought or sold, okay, now went down so far, now it can be negative. It's just the way the numbers go. What happens after the buy a contract and the stock goes down? Well, 80s music, I don't buy options. I only sell options. Because if 80% of all options expire worthless, why do I want to buy them and make chance of being wrong 80% of the time? No, I only sell them. And yeah, stocks go up, stocks go down. If you think they're going to come to your house and mow your lawn or do your laundry, wash your car, yeah, no. They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. What percentage of your account would you say is used to hold stocks that missed the strike and now have to wait? I'd say about 30% at this moment in time. I think three times in 20 years. So I've been trading for 20 years. 3 times in 20 years, every single one of my stocks got bought out on a Friday afternoon, and I'm 100% cash again Monday. Only 3 times. Once was this year. It's like, holy shit, what am I going to do? But yeah, most of the time I do carry stocks from one week into the next. Sometimes they're out in 5 days, sometimes 10. At this moment in time, the longest one I currently have is 6 months. Okay, and that is Wynn Resorts. Okay, do you look at earnings? No, I do not look at earnings. I thought I said that earlier. Okay, what do we got? What do we got? What do we got? Maximus. Why are you checking midweek? Because you would roll it before being called at a loss. Okay, Maximus, I always take a look at opportunities when they present themselves. Holy cow, it's getting a little warm in here. What's the major benefit between your strategy, basic swing trading for weeks? This is just a different trading strategy. Okay, this one is simple, safe, predictable, consistent, and no way to lose. That's what I like about my trading strategy. Okay, hope that answers your question. So you sell puts and calls. Anonymous, yes, I do. Uh-oh, uh-oh, here we go. What do we got? What do we got? What is your trade strategy? Car 24 cars. My trade strategy. Buy a good quality dividend stock, sell a covered call against it, collect a weekly premium that equals 1% or more. 1% or more per week is over 100% per 50% per year. Okay, Pensagus. Yeah, Plantair doesn't have any dividends. That's a no. So you like to hedge, if that's what you want to call it. I call it covered calls. Buy right, whatever. Please repeat that slower. What's your strategy again? Whew. Okay, you ready? Here's the strategy. Buy a good quality dividend stocks, mainly a company that has increased its dividends for more than 20 consecutive years, simultaneously selling an option, a covered call against the position you had, if and only if the option premium value is 1% or higher, and the chart tells me it's the right time. I don't like buying at the high. I don't like buying at the low. I like buying where it turns around and starts going back up again. So timing is everything, along with sizes matters. Size matters, yeah. The size of the premium, as long as it's 1% or more, it's a yes. All righty. What's your year-to-date returns? Oh boy, everybody wants to know year-to-date returns. Okay, I haven't calculated this month's yet. Okay, to be totally honest with you. Okay, week 44 is this week. I haven't calculated the earnings. Okay, week 43, that's 2 weeks ago, 3 weeks ago, 4 weeks ago, 5 weeks ago. So last time I counted was week 38. Okay, so week 38 was 5 weeks ago. I haven't counted so far, but as of week 38, which was 4 or 5 weeks ago, I'm up to 82% year to date in account number 1, over 70% account number 2. Now account number 3, we've only started in July, and that's up over 10% already. Actually, over 30% already. Okay, so year to date. Now, they're all here. And if you really want to look, go all the way down to the bottom on this page. I had little snippets from my blog. I did a blog back in 2011. Starting date August 31st, 2011. 9.75% average monthly yield. So in theory, you could just keep selling calls on a stock you mentioned and miss the strikes. Yep, you could. Doesn't red mean bad? Absolutely not. Okay? Green is buying. Red is selling. Green, buy, red, sell. Okay? Profit, profit, profit. That's what I like looking at. The red is when I sell something. The green is when I buy something. So as you can see all my trades that I have made all year long. Okay, Macy's, KeyBank, 3M, Emerson, KeyBank, Macy's, 3M. So on and so forth. Let's go back to where we were. to where we were. Oh, I thought it was an Excel spreadsheet. No, that was just my buying and sell. The wheel strategy is one of the best ways to make money. You will just need higher capital. All right, Anonymous. Now, I like the wheel strategy. I do. But when I say I created this particular strategy for my 9-year-old, okay, I did not teach my 9-year-old about put options. If you own the stock at 100, why is the If you own the stock, or if I own a stock at 100, why is the 110 strike premium so high compared to the 105? Well, you actually have to give me an example so I can actually look at it, because you just telling me it doesn't mean anything to me, because different companies have different premium values. Ace, how's it going? So in theory, blah, blah. Plantair is a no. I don't know who came up with that one. Major benefits, putting that one. B. Jones, how do I go look over your shoulder? Ooh, B. Jones is asking me a question. So you're on Thinkorswim. Exactly. Okay, Anonymous, I do like the wheel strategy. I just don't do it here. Where do I find the website? Okay, see the bio right up here in the top left? My picture right there in the top left, along with the words Dividend Stock Talk. You click on that in my bio, the detailed information about everything that makes me, me. Okay, you will see the 10-minute trader. There's a link there. Hi, James. How about Comcast? Comcast, CMCSA. Yeah, it sounds funny, though, doesn't it? CMCSA, Comcast. Okay, Comcast, first thing. Whoa, got a question. Why do you share your knowledge? Why do you share your knowledge? What's in it for you, sir? Thanks. Aha! Slime, what do you call it? Satisfying slime time. Okay, now this is a great question, and I don't get this question that often. I do get it once in a while. Why do you share your knowledge? What's in it for you, sir? Well, let me tell you why I am doing this. Some of you may think, well, why the hell? What is he selling us? I'm not selling you anything. Okay? Now, you will know whether or not this makes sense to you. You will also know if I am sharing a trading strategy that gets you 50% per year, and I have 6 different accounts and I only share 3 of them, what do I have up my sleeve? What else can I have out there? Well, I've written 14 books. I have over 900 podcasts recorded, over 300 videos on YouTube. You can take a look at all this stuff. It's all free. But some people out there want one-on-one advice, want to look over my shoulder and do the trades with me. Those are the people I'm looking for. Also, I am doing a documentary series. Okay? I started many years ago. I'm building an empire for my children to inherit. My children are 35, 30, and 25. Not quite there yet. They're at a point where money is becoming more important to them rather than, oh, I want to be a ballerina, or oh, I want to do art, or oh, I want to, yeah, whatever. Realization is setting in where they're trading their time for money, and profits are better than wages is starting to finally sink in. So I'm creating a legacy, something for them to go back and watch. Well, how did Dad do this? For my children and my grandchildren, because I know for a fact I'm not going to be around forever. But what will be around? Well, I got videos of me 10, 15 years ago. They can go back and they can watch, what did Grandpa do to make all this money? What did Grandpa do to start this company? Well, that's what I'm doing. I'm sharing my information with you good people. I am looking for a very small group of people that are same like-minded, that want to be part of my next company. Okay, I will be having board seats available, okay, for a very select few. Okay, all having the same goals in mind. Simple, safe, predictable, consistent, no way to lose trading strategy. So when I create the company and I offer shares of my company, I can offer them at a guaranteed rate at 15 to 20% per year. Well, nobody gets that now. but guaranteed through the insurance company at 15 to 20% per year. And then all the other shit that I have coming up along with it to have people double dip, making twice as much, make up to 80 to 100% per year, simply, safely, predictably, and tax-free. So it is a work in progress. So this year is one solid year of every single night doing a podcast like this, showing my strategy. So the investors and people, such as yourself, say, wait a minute, I don't want to do all this. I just want to invest in a company. Great. Invest in my company when the time is right, another year or two, and then you can get guaranteed 20% per year. Unfortunately, the bank, not the bank, sorry, the insurance company will not allow to offer higher guaranteed rates than 20%, as far as I know. It might change in a year or two. That is why I'm doing it. I'm creating a legacy for my children and my grandchildren. Granted, I only have one grandchild at the moment, but I am hopeful that eventually I'll have a handful. Maybe a soccer team. Who knows? I only have 3 kids. All right, so that's why I'm here. Also, another reason why I'm here. At some point in time, I will no longer be here, but I want my knowledge that I accumulated over the 50 years of me working. I've been working since 1973. It is 2023. I've been working for a long time. All the knowledge I have accumulated is now available on video for my children and my grandchildren. Okay, so 20, 30 years ago, when I'm gone, they can pick it up, say, oh, what did Papa G say such and such date? Well, they can go back and see the video. Hi guys, how you doing? Anyway, that's why I'm doing it. Okay, you guys are just along for the ride. A happy coincidence. I'm creating something for my children and my grandchildren, and you guys are getting the advantage of being here while it happens. Okay, so that being said, let's continue. I'm late in any plays for tomorrow, calls and puts. Tomorrow's Friday, Brax. Okay, I don't do any buying on a Friday. Okay, I do most of my buying on a Monday and Tuesday, because here's the thing. 80% of all options expire worthless, so I want to be an option seller. I want to be on the 80% team. I'm only looking for 1% per week. That's easy to do. Great, well, let's do the consistency, predictability, all that kind of nice, neat, fun stuff. So, I have nothing for you for tomorrow, because tomorrow we take a look at all our positions we bought on Monday and Tuesday, and we see where are they, where does it look like they're going, what is the best, safest strategy for next week. Because remember rule number 2, never sell at a loss. I don't want to have any losses anywhere. Now, I'm consistently learning, because there's a lot of stuff I don't know. I'm good at what I'm good at, and I'm good at what I share. I do not change what I share from the video. You saw the video that I shared earlier.
Seriously. By picking just one company per month, just one. January, February, March, that's 12. 12. You can buy 12 different companies for the whole year and still make over 20% a year. That is easy.
Okay, that was recorded 12 years ago. Okay, I've been doing this for a long time, and I'm saying almost the exact same things as I said 12 years ago. Now, this is not my first video. My first video, I believe, was on a different channel. I believe it was like a year or 2 before that. But anyway, my daughter was 9 in 08. This one, I believe, when was this one? 12 years ago. Okay, see right here where it says 12 years ago? Yeah, I used to have onlinetradingsystems.com, dividendstocks.com, all that kind of nice, neat stuff. Dividend investing to collect a dividend check is an old strategy with an EX dividend date and a calendar to organize your online stock trading, blah, 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 blah. That's all there, 12 years ago. If you, I forgot it. If you do not sell at a loss, so you have to carry the drawdown in your account, am I getting it right? Not necessarily so, because very rarely, I don't think I had a couple losses this year, but I always tell people, be careful because when you hit the wrong button, you're susceptible to making a loss. Okay, so I made a loss this year by hitting the wrong button. I made another loss because of the hurricane. I couldn't get online on Friday. Okay. I forgot where I was going with that. Damn it. This getting old shits for the birds. Thoughts on Volkswagen stock? Nope. Anonymous. Oh, gotcha. All right, whatever. Watch out for some put to play Tesla this coming week. Oh, yeah. I don't do puts. Well, I do puts, but I don't do them here. Keep your eye on some puts coming up this week, okay? Have you been dividends the whole time, or did you pivot from growth funds to dividends? All right, Rich, when I first started, I started over 20 years ago, back in the 90s. Okay. Now, when I started trading, it was $125 per trade. Nowadays, most of the trades are free. So worst case scenario is just hold on, keep selling call, and maybe collect dividends along the way. Is that right? That's absolutely right. As a matter of fact, the longest I've ever held anything was Kimberly-Clark. I held it for 9 months. Now, within those 9 months, I collected 3 dividends and like 35, 36 premiums. Okay, I made out very well. The stock was here, it dropped, floated on the bottom for a little bit, it came back up, topped off, and I was able to sell it for a profit. Okay, I collected 3 dividends and about 30 some odd profits, premiums. All right, so let's keep on going. Oh yeah, so when I first started, it was strictly options. I would buy options, I would sell options, and I made a lot of stupid mistakes. Okay, I would buy options expecting them to double or triple. A lot of them did, because that was years ago and not many people knew about options. Okay, great. So you buy an option, it went up in price. I made a shit ton of money. I did. And then I started getting cocky. And then I lost a shitload of money. So yeah, so I learned a lot and lost a lot over the years. That's my first 5 years. And then the last 15 years is basically all this strategy with a few others tweaks here and there. Because it's simple, safe, predictable, and it's about 50% per year. How did I get down to 58 again? We have 15 minutes left to go. I'm not going to worry about it. We got a bunch of questions. Can we look at McDonald's before you take? All right, Mickey D's. Oh, wait a minute. We'll look at Comcast. Let's look at Comcast, then we'll look at Mickey D's. All right, hold up. Comcast. High, low, where was it? Where is it? What's the direction? Up, down, up. All right, that's simple enough. I wonder if there's a way to automate your system to make it very systematic, robotic thing. Ugh, I don't trust robots as far as I can throw them. I actually, so old school, I still write shit down. Sorry. I come from an age where if it ain't broke, don't fix it. Hey, Sweetie Swag's here tonight. How's it going? Dottie Van Der Walt. How's it going? We're going to take a look at Mickey D's in a second. Hold on. We're looking at Comcast. Alrighty. A year ago, Comcast was at 43. Didn't we already do this? High was 47. The bottom was in April at 36. And now we're here. Look at that nice movement to the upside. Okay, up, down, up. Okay, so she's going up. Great. So if I like Comcast, which I do, okay, it's currently going at 41.89. Well, we all know the closest strike price to 41.89 is 42. Okay, 42. It's going for 92 cents. Yes, we already did this one. All right, let's go to the next one. Next one, Mickey D's. Mickey D's. MCD. Ooh, Mickey D's. High, low, where was it? Where is it? Up, down, up. Easy enough. But what is this right here? I want to take a look at that. Well, currently it's at 301.95. Now, we all know the next number up is 302. But there is no 302. There's a 302.50. But look at the number on the 302.50. $5.55. That is well over 1%. Okay? Now, you could even go the 300s and get over 1%. Actually, get 2% at 300. No, you wouldn't. because you lose $1.95. You take $1.95 off of this, then you're at the 4.15, something like that. Okay, so you're over 1%. The 297's over 1%. The 295's close to 1%. Okay, so you can go deeper in the money. See, the deeper in the money you go, the safer the trade is. Smaller the return, but safer the trade. So you got to balance it. Everybody's different. I had somebody this morning who had bought at the money and sold 5 strikes out of the money. Okay, it worked for her. That's what she wanted to do. Okay. I love the goals. Hey, Maximus, I'm glad you like that. .e, you look at cover calls. Yep, that works. So let's keep on going. We got 11 minutes left. What's your P&L, bro? Over 50%. Okay, my profit and loss. Oh, you're going to hate this. Seriously, you're going to hate it. Let's get out of that. Let's go count statement. Let's get out of that. Profit and loss year to date. Okay, in this particular count, okay, 1, 2. Only 2 losses. Ford Motor Company and Walmart. I lost $28 on Ford, and I lost $120 on Walmart. Okay, so account right here, you're going to really hate this one. Uh-oh. Up, wrong. Let's go all the way back to the beginning of the year. Oops. I want to go to the beginning of the year, to January. Oops. January. Okay. Profit and loss year to date. Shit. What the hell did I just do? Oh, yeah. I don't want to see that shit. Those are all my trades. Okay. Profit and loss year to date. See, there's 2 of them. 1, 2. But they're not losses because I still own them. So this account here, look at all these trades I did this year. Not a single loss at all in this account. Okay, and this account's up over 70% so far this year. So I hope that satisfied your desire. Let's go back to here. Let's go back to here. Let's go back. Okay, here we are. So Mickey D's is going to be a no. Wait a minute. Let's take a look right here. Okay, so take a look at what Mickey D's did the last 30 days. Okay, up. Big, huge gap down. I'm assuming that's because of the bad news. What's the best way to keep track of your options on a website? I like to write them down. Seriously, I do. Because once I write them down, look, right here. See, I wrote these ones down. These were just ones I was thinking of. And we're going to check them tomorrow, see if I was right. For next week, BTW. What the heck is BTW? BTW, by the way. Yeah, thank you. Can we do American Airlines? Why do you want to do American Airlines? Okay, American Airlines. High, low, is, what's the direction? Up, sideways, down, up. So we're at 12.77. The 12.50s are the closest at 50 cents. I'm losing 22, take 22 off of that. That means I'm at 28. 28 is 2%. So 2, American, that one. No, Neo's a no. No. Okay, so if you like American Airlines, that should be the first question. Do I like American Airlines? Do I like American Airlines at this price? So at this price, $12.77, sell the 12.50s. Matter of fact, let's do one real quick. Okay, let's get out of here. Oops. Let's change this to covered. Let's go to the 12.50s. Okay, let's do a market order. Let's do just 100 shares so we don't freak anybody out. 100 shares, here we go. Here's what it sounds like. Buy 1 covered call American Airlines, the weeklies. 1 November 24. That expires next Friday. the $12.50 call strike against the stock IAL. Okay, at the market price to open. Here's my break even, $12.25. Well, maximum profit on this trade is $24.50. Get out my calculator. Clear, $24.50. What is my cost of the trade? The cost of the trade, including commissions, is $1,226. Divide that by 1,226. I get a grand total of 1.99%. It's almost 2%. Must have been back in January, dude. So that you've been, So you've been just selling calls on it or what? No. The longest I've ever held anything is 9 months. That was last year. This year, I've held for 6 months. Okay? All right, so 1.99%. That's almost 2% on American Airlines. If you like American Airlines, that's the big question. Do you like this company? Well, you know who they are. We all know who American Airlines is. They've been around for quite a while. I bought AAL at 16 a share. Okay, I'm not quite sure what you want me to say about that because right now it's at $12.77 a share. Okay, what's your P&L? We already did that one. Next, blah, 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 blah. Blah, 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 blah. Okay, I'm missing these questions. Okay, here we go. Nice. Now I understand your strategy. Cool beans. I'm glad you do like it. It's a game changer, ain't it? No, do Comcast. Alexander, I have no idea why you say that. His strategy is buying the stocks that pay dividends and then selling covered calls. A good strategy. Thank you. Okay, Anonymous, what do you mean by selling covered calls? Somebody's new here. Dan, how do you determine the size of your trade? What are your guidelines? Oh, Dan, it's a cool question. Let me ask you a question, Dan. If you have $100,000 and you divide it into 5 trades, okay, that's 20,000, 20,000, 20,000, 20,000, right? If I wanted to do just 4 trades, it's 25,000, 25,000, 25,000, 25,000. It's just math. When you sell a covered call, you collect the premiums. Yep, instantaneously. Also, I only bought like 3 shares, so it doesn't matter. Sorry, Noah. It is, it's beginning. You're just beginning. Okay, my grandson, he has his account. He started with $50. Granted, he doesn't have a whole shitload in there, but he's only 4 years old. I maintained it for him, but it's okay. 80s music. I was looking at your week 44 and don't understand anything on the chart. You don't understand anything on the chart. +3 means buy 3. -3 means sell 3. Plus 1,000 means buy 1,000. -10 means sell 10. Okay? Riot is a stock symbol. AAP, Advanced Auto Parts. HOG, Harley Davidson. Okay? What kind of a strike price? What is the stock or call or option? What is the fill price? What is the price here? What is the order type? Market order, limit order. Okay? Buy, sell, what is it? The date? Is it a covered? Is it a calendar? Is it a vertical? Everything's right there. What is it you don't understand? Okay? Here, the second entry, AAP. Buy 1,000 shares of Advanced Auto Parts at $40.62. Sell 10 contracts of Advanced Auto Parts 25 October 24. That's this Friday. The $40.50 call premium at 96 cents per share. That's more than 2%. Okay, the numbers are all right there. Everything is all right there. What you don't understand, I don't understand that you don't understand it. Okay? Now, when I said I didn't put all the numbers in because I just uploaded this week, okay, I haven't put in the stock symbols, how many there are, and what's the percentage rate that I made. Well done. 86, thank you. Anonymous, also, you will have to own 100 shares and only do one covered call. Anonymous, you can only elaborate on, 100 shares. Yep. Fanny, Favaminis, I don't know. Your best bet is to Google or YouTube selling covered calls. Yeah, YouTube's a great place. American Airlines, no dividends. Yeah, I didn't say I bought it. I just said I was looking at it for someone else. Okay, I bought 100 shares of a stock and sell a contract to collect a premium. Collected 42 bucks. But the stock, what do I do now? Dude, I have no idea. Okay, so I'm assuming you bought a stock, sold a premium against the stock. What do you do now? Well, you either wait for that option to expire, okay? Either you get cashed out or you take it into next week and you do it again. And you keep doing it until it hits your target price. Hopefully you bought shares or stocks in a company that pays out dividends, because just before the dividend, the stock goes up. I'd like to talk to you one-on-one. Is that possible? Sure, Dan. Drop me your number and I'll give you a buzz. Then you have to let me know. If tonight works, hey, I'll call you tonight. Music, 80s music. If above strike, your stocks are sold. If below, you keep them and keep your shares. Yep, that's about right. Maximus, you only roll forward if you are in a negative position or are you in danger of being called. It's all about the numbers, okay? There's a possibility where I just might want to roll forward because it has a nice premium. Great sense of humor. I'm glad you like it. AT&T has good dividends. Yes, it does. However, AT&T is at the high of the year at the moment, and I don't buy at the high of the year. I know, it's weird, isn't it? See? Look where AT&T is. It's at the high of the year. Okay, it's like standing on a ladder waiting for someone to bring you a taller ladder. Yeah, no thanks. So Dan, I already told you how to do that. Oh, look at this. Glorio's retire. Cool, how you doing over there? So why do you buy only on Mondays? Julian, the reason I buy only on Mondays, remember where I said 80% of all options expire worthless? Well, I want to be an option seller. I want to be on the 80% side. Why do I do it on Mondays? Because as you see, 25 October, that expires on this Friday, tomorrow. 1 November, that expires next Friday. 8 November, well, that's 3 Fridays away. 15 November, that's 4 Fridays away. So, Friday is the day where I want to be cashed out. So, if I buy on a Monday, sell on a Friday, I have 5 days of time value. So time value is what you call the theta decay. A little complicated, but time value. Monday, Tuesday, Wednesday, Thursday, Friday. If I buy on a Tuesday, well, now I only have 80% of time value. On Wednesday, 60% time value. Thursday, 20% time value, and Friday, 10%, 20% time value. So my highest rate of return is first thing Monday morning. Buy first thing Monday morning, sell first thing Monday morning. Wait until Friday, hopefully it expires worthless or expires in the money. I'm back into cash on a Friday. How you doing today? Woohoo! Over there on Instagram world. Cool beans. Okay, Dan, you'd like to talk to me one-on-one if that's possible? Yeah. DM me your phone number, I'll give you a buzz. Okay, why do I buy on Mondays? I already answered that question. What else do we have? Let expire. Yep, that one too. What was your capital when you started? I started, I think it was $12,000, and that was in the 1990s. Okay, if Kamala Harris is elected, certain options might be stronger than others. Okay, yeah. I don't pay attention to any of that stuff. I have never once, in all my years of being an adult, had anything positive or anything negative come out of Wall Street that actually, I mean out of Capitol Hill, that actually had anything to do with me. Julian, you do not roll, you do not lose your premium when you roll. Okay, so when the stocks go up, the option goes up also. If you're going to roll forward a week, you have to buy that one back. As you buy that one back, you're selling another one to cover the cost of the one you bought back. so you get an additional premium. It just keeps going. All right, it's past 11:30. I'm out of here. I'm going to answer these last questions, and that will be it. La, 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 la. Do you have videos? This is interesting to me. I would like to take a look and learn. Okay, Favanames. Favanames, is that right? All right, first thing you want to do is go up to my bio right there where it says Dividend Stock Talk, my pretty little picture right there. Give me a good old slap tap on that, and that will take you to my website, the 10-Minute Trader, which is right here. The 10-Minute Trader. Do a Google search. Do a Google search on the 10-Minute Trader, who owns it, who's been it, blah, 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 blah. All that kind of nice, neat, fun stuff. Okay. So, on there, when you get to View All, click on that, and that will take you to all my social media. Okay? YouTube channel. You get over 14, 15 years worth of videos. There's over 300 videos into my name. Twitter. Yeah, I'm not that active on Twitter since they've changed. I'm trying to get active on Twitter. Facebook. Yeah, Facebook only holds the videos for 30 days and they get rid of them. So I'm not that glorious about Twitter, about Facebook. Hi James, could you explain how to roll another call option and what is involved? Fave says Discord. Fave animes, and if Discord there, I'll join as well. Okay, yeah. Hold that thought, because the Discord is only for paying members, as well as the morning trading group is only for paying members. All right, so there's a podcast. Podcast has over 900 episodes. LinkedIn, I'm not that on. Patreon, TikTok, and books by James. Yes, James has written 14 books. I haven't uploaded them to my own website. They're available on Amazon, but besides the point. So if you go to YouTube, okay, the 10-Minute Trader. Look, here we are right there, live right now. See, I told you the screen's live right now? Go to my videos. Go to the oldest videos. Okay, there's the princess.
This year, there are 250 trading days. Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5.
Anyway, let's go back one. She's so adorable when she was 9 and 11. Okay, we'll look at the oldest. Now, as you're looking at all my old videos, okay, 2003, yep, I used to have this software, cool. Dividend trading for monthly cash flow, getting familiar with Thinkorswim, simplified stock chart reading, stock chart pattern recognition. Yeah, these are all mine. Look, 11 years ago, 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 12 years ago.
Hi everyone, it's JC from the 10-Minute Trader, and let's do some trades. First we'll exit out of the screen right here because we don't really need it. We're going to go over to our calculator. And over here in the 10-year performance column, we're going to look at ones that are 80% or higher.
Lots of videos, lots of books, lots of everything. Okay, hey, can you explain how to do world call? I will look at these videos. Thank you. They're old, okay? And I do have some newer ones I need to get updated. All right, anyway, it's past 11:30. I will catch you guys all tomorrow. Now, for those of you that are here in the morning trading group, we will see you at 2 o'clock tomorrow. 2 o'clock. Because we need a little bit more time with all the new people coming in. Now, I am going to cap off the live trading sign up because I don't want too many people there. I like to be able to interact with people one-on-one. Okay? So if too many people show up, I have to limit it. So there are only a certain amount of spaces left available. That being said, you guys have a great night, and we will see you again tomorrow night. Let me turn that one off. All right, done over here on Facebook. Okay, and over here on Twitter, bye Twitter. And you guys, catch you guys tomorrow. All right, Dan, I'll give you a buzz in a couple of seconds as soon as I'm done here. Done there. Done there. And